Hello, good afternoon, everyone. Welcome to the day 13 of Innovation and Inspiration at TechFusion GCC 2024. I'm Sohail, your guide on this exciting journey, proudly hosted by FINAP Worldwide Bahrain under our pioneering Gulf Platform Solutions. As we always say, it's not just about connecting, it's about igniting spark of possibilities and exploring the limitless horizons of technology together with GPS. A wait for a session packed with software insights tailored for your business. At FINAP Worldwide Bahrain, we are not just creating solutions, we are leading a change with our GPS platform. This effort goes beyond typical projects. It reflects our commitment to connecting every ambitious mind in Gulf with cutting-edge technology. With GPS, we are pushing boundaries further into the space of software solutions. We are a digital revolution that's accessible, cost-effective, but also cutting-edge. This is innovation like you have never seen before. Now let's talk transformation. Today's spotlight is on ECOru. ECOru provides an all-in-one inclusive, modern, yet simple digital core banking system built to empower small to more complex financial institutions and banks. Today, the main focus is on ECOru's loan management module. We'll be talking about loan product creation, loan management. We spoke about ECOru and its features in the episode 8 in this webinar series. So if you'd like to know more about this comprehensive core banking system, you can go through that, and which we have uploaded on our FINAP's YouTube channel. You can simply search FINAP and you'll be able to find our webinar series, and you can go on to episode 8. So without further ado, let's dive into the system. Hopefully this will be a very insightful session for you, and you'll get to know about loan management and how a loan creation process works. When you open the system, ECOru, you will be greeted with the dashboard. So now today, since we are specifically talking about loan management, how we can create a loan product and how we can disperse a loan, we'll first go into creating a loan product. That can be done under system administration and loan products. So here's where you start creating loan products. In our system, it goes as a creator authorizer function. So when someone creates it, the super admin or a higher personnel needs to authorize the product. So in a loan product, once you create it and you authorize it, you have the option to inactivate the specific product after a specific time period if the loan product is only valid for a specific time, or you can reactivate the product once you have been activated for quite a while. Right. So now first let's just dive into loan product creation. Moving on to loan product creation, here's where you start creating products. So for example, there could be multiple products that a financial institution may offer as a loan. Just to give you a couple of examples so that you can understand better, there could be loan products like merchant loans, personal loans, women's loans, or could be student loans. Likewise, there could be different loans given for different age categories for different interest rate. So that is what we are going to do in this module. We are going to create loans for different segments in the society so that we can target those demographic and give loans to them. So now we can just click on create new loan product. Here's where you type the basic details of the loan. The product code, you can type in any product code for the loan. This would be the loan code. The name of the loan, this could be women's loans, 18+ loans, kids loans, whatever it is. Education loan, you can type in the product name, the currency that the loan is issued in, the day basis that the loan is calculated for. It could be a 365 date year, or it could be a 366 date year. When you're printing the receipt for the customer, you can choose to have only the total due in the with the print in the receipt, or you can have the total due and the interest printed on the receipt. Here you can set up the minimum age for the loan category and the maximum age for the loan category. And here you have the option to select it as a group loan. If it's a group loan, you can set up a recovery account for the loan. If you're issuing a passbook for the loan, you can click here to issue the passbook. If this is a root loan that a field agent or a field officer would be collecting in that specific route, you can mention it as it as a route, say that a route is required. If you are using a specific workflow for the loan, so there could be multiple ways how we process the loan. There could be that there could be multiple authorization levels for the loan to be passed. So the loan creator could then pass it to the loan officer, then the loan officer can then pass to the loan manager, manager could then pass to the head office could pass to the legal department, and from the legal, once everything is clear, then they could come back, revert to the head office saying that the loan is good to go, and the loan granting would be done again by the teller. So likewise, I just explained a very simple loan workflow, but then there could be different workflows according to your organization, how you offer loans. So here you can create a workflow. You can then select how you want the workflow to go for this specific loan. And you can also, if you are offering a loan against the FD, then you can click here to do that. Here you set up the early payment settlement. If the customer pays the payment early to settle, then you can book it to the advanced payment account, or you can settle from future installments. Here you can select how you want to make the payment settlement. Now, in this function, you can route all the GL codes to the loan. So if it's a performing loan, then we can record that into a separate GL. Non-performing loan can be routed to a separate GL. Interest reversibles can be recorded in a specific GL. Interest income can be recorded likewise. The provision in the impairment losses, the interest in suspense, loan payables, penalty charge receivables, and penalty charges, all this can be routed to different GL accounts. Here we can set up the loan types and the interest rates. So in loan types, you have multiple options. Like if you are offering this loan in equal installments, then you can have it as select the equal installments function. If it's a monthly flat rate, then you can offer the loan in a monthly flat rate. So this could be a flat rate for the loan amount, reducing balance in equal principles, flat rate by period, daily flat rate if only calculating the interest only in this loan, or if it's a single payment loan. So you can you can select the loan type here. Here you can set up the rounding types for the loan. So you have multiple rounding types. Round up, it could be round off, up or down. The ceiling round up, flow round down, and if you're not rounding up, then you can just select on not. In the interest rate, again, here's where you set up the interest rate for the loan. You can have it as a fixed interest rate. So if it is a fixed interest rate, you can just type in the interest rate. Let's say that the interest rate for this loan is 20%. You can simply type 20 here. So if you have a base interest rate, then you can set up the base interest rate, and then you can set up the interest rate here. So if you're acquiring the interest after maturity, then you can select here. So then the interest will only be calculated after the maturity period. Under the general information, you can type in how much the loan amount could be granted for this specific product. So this product, it could be given for let's say it's between $10,000 to $50,000. Then we can type in $10,000 here. So 10,000 here. And 50,000. Right, so it could be with different ranges. So the person who's applying for this loan can apply for any amount between 10,000 to 50,000 in this specific scenario. Or let's say that this loan is only given for 20,000. Then we can simply type 20,000 on default, and that would be a fixed amount for this specific loan. The terms that is granted for the loan, you can have a minimum term period and a maximum term period. Or if it's default by, let's say this loan is only given for 2 years, and that is fixed, then we can have a default period. We can set up the grace period for this loan, a minimum and a maximum, or if it's default. During the grace period, we can set up if the customer only has to pay the interest, or if there's nothing to pay at all during the grace. In the grace period tenure type, you can select either if it's you can extend the loan tenure or adjust the installment amount during the grace period. And you can also set up the loan schedule is based on if the schedule is based on total loan amount that they applied for, or the total amount or the payout amount after deductions of all the loan. It could be that there could be charges for loan disbursements and stuff. So after all the charges, if you're only calculating the schedule on the payout amount, then you can select here. Here's where you set up the payment frequency. You can set it up as daily, monthly, weekly, bi-weekly, or month end.
So if you select on daily, then you can set up the collection plans as to what days that you're collecting loans for this. Collecting the loan payback money for this. So let's say that our financial institution is only operating on the weekdays. Then we can simply select the this is for non collection dates. So we can simply select the non-collection days as Saturday and Sunday. And if there's any government holidays or there's public holidays that we are not operating, so in this specific calendar year, we can set up the calendar year, and we can set up dates and say what holidays. So this could be, for example, the national holiday. So when we select like this, the day will be highlighted, and on this specific day, they will not be no interest will be charged. So it's a Friday, even though it's a weekday, which supposedly we are collecting loans, but since it's a government holiday, um, the company is not operating on that specific day, so that we cannot calculate any interest on that day. Here under the recovery information, we can have the sequential order how we are recovering the amount once the amount is paid back from the customer. So let's say that a term payment comes as they have taken a loan for $10,000, and their monthly payment is 1,000, and they're paying 10 terms. So when they pay 1,000, we can then calculate how we are taking the interest and how we are deducting other charges. So here basically by vertical method, you can set up the sequence on how we recover the funds. So first it could be that we recover, we take the other charges, and then we could be deducting the late payment fee, and then we could be deducting the late payment fee variables and the interest, and finally we could be deducting the principal. So we can set up the sequence how we do. And we have the horizontal method as well, so you can set up in a horizontal method that equal payments could be taken off. And here we set up if the late payment penalty is imposed on either the capital due or the total outstanding amount that the customer has to pay, or the customer due plus the interest due, or if it's a total due. Late payment fee could be a variable fee or it could be a fixed fee. If it's a variable fee, then we can set it up on a percentage. So this percentage, again, this is what we're selecting here. So if the percentage is being calculated for the total outstanding amount, or if it's only for the total capital due plus the interest due or the total due. So let's just for the sake of the demo, let's say that we are calculating it for the total due, and then let's say we put it as 10%. Then the 10% variable fee for the late payment will be imposed on the total due of the loan that the customer took. And if it's a fixed payment fee, then we can just type in the amount that how much we are charging for the specific loan. So let's say that we're taking 10,000. So that would be 10,000 as a fixed amount, regardless how much the person takes the loan for. So here is where you do the classification and the provisioning. So you can set up different classification types. You can classify the loans as past. If it's a special mention, you can do that. Substandard, doubtful, or loss. So here you initially you have to set up when do you start the non-performing days. So let's say that after 60 days of non-payment, which is 2 months, we start the non-performing, and then the customer pays back and he's paying on time, let's say, and then we can move back the loan to performing again, let's say in 60 days, and that we could set it here. And the interest in suspense we can start in a number of days. So we can start interest in suspense maybe let's say a month, right? So we can set up those information here, and then we can have the loan classifications here. So during the first, if the customer is paying on time, then this could be on the 1st to 30th day, and the customer is paying on time, so this could be pass. We can categorize this as a pass, right? So again here under the classification, we can have it as to allow provisioning, so that we can allow the provisioning. So from the 31st day to the other day, which let's take 45 days, so 1.5 months, we can have it as a special mention because the customer is paying, but then he's paying a bit later, right? So, and then the 46th day to 60th day, which means that at this point the customer is paying after a month, then this is substandard because the customer is still paying, but so after 2 months to 2.5 months. By the way, these are just taken as exemplary numbers, so you will be able to take basically follow the procedures that you are following in your finance institution. So this could be that after within the payments are not coming basically after every other 2.5 months, then this could be a doubtful, or this loan could even be a loss, right? So you can perform classification and provisioning under here, and in here you can set up loan charges. So you can have multiple events where you're charging the loan charges. So it could be after the loan authorization, or it could even be as early as applying for a loan. So you could be having a loan charge when they apply for a loan with the loan application, right? So if once the loan authorization comes through, then there could be there could be a charge. There could be charge on the loan manual payments at disbursements. So here you will be able to add multiple events as to your how your organization calculates loan charges. So once, let's say for the sake of the demo, let's take that we are charging a loan charge at the disbursement. So we select the amount, the event as a disbursement. The charge name, we can set it up as disbursement fee. And the charge method, how are we going to charge, if it's a fixed or a variable? So let's say for the sake of the demo, it's a fixed charge, and the amount, how much we're charging. So we can type in the amount and what GL account that we want to make sure that this payment is going to. We can have different options for the customer to pay. So either the customer should deposit the money for the loan, the fee that we are charging, or we can deduct it from disbursement amount. So at the time of the disbursement, after all the loan charges, they will receive the deducted amount from it, right? So and we can set it up the event charge if it is based on the loan amount or only the disbursement amount. And you have the option to split the charge if you are doing so, right? So you can add charges likewise. So there could be multiple charges on multiple events that you can add for this specific loan product. Under the checklist information, this is where you check in all the information that is needed. So for this specific loan product, let's say that we need the NIC, the address proof document, the customer site images, income details report, guarantee details, and only the passport. So these ones will be mandatory at the time of creating the loan, so that the customer needs to bring these documents. So at the disbursement checklist, we can have the list that the employer needs to go through with the customer to make sure that everything is ticked in. So in this branch information, this is where you select the branch where the loan is being granted from. So if you are if you are given this loan from all the branches, then you can just select on all branches. If it's only given for a specific branch, for like, let's say for example, it's only given to the head office, then you can simply select on head office and add branch. So this loan product will only be displayed in the head office. So if a customer wants to apply for this loan, then they'll have to go to the head office and apply for the loan. So here we can set up sectors. So we can have different sectors that we grant this loan for. It could be the agricultural sector, the banking and finance sector, the construction sector, whatever the sector that is. We can have a sector. Let's say that it's a general loan that we are giving to all the sectors. We can simply select on all sectors. And here you can select the collaterals that we are charging, that we need for the loan. So it could be the land or the buildings, the deposit accounts, the vehicles, guarantors, or any other collateral that we do. So once we configure all this information here, then we can save the product. And once the product is saved, then the authorizer can go through the product and authorize this. So once the product is authorized, then the product will be in the system. Now moving on to the loan management, just to go over the module, in the loan management, we have functions for loan creation, the loan disbursement, route creation for the field officers to collect the loan charges, the manual loan payment, loan write-off or waive-off, loan rescheduling, loan moratorium, loan settlement reverses, and reports for the loans and the loan documents. So let's go on to create a loan. Right, so when you go to create a loan, we should first select the customer that we're giving the loan for. So either you can type in the customer's number or you can search for the customer. In this case, let's take a customer as Pereira. Yeah, so it shows all the customers that has the surname of Pereira that is in the system, and we can then from here we can select what customer exactly that we're giving the loan for. So let's say that this is Kamal Pereira that we're giving the loan for, and we can select from there. So once we do select, all the information about the specific person comes up automatically. So it shows the member number, the identification number of this person, the customer name, the address, and the status. If the person has taken loans previously, it shows the number of loans that the person has taken and the total outstanding amount. So here you can select the product that we are offering this person. So initially we created a loan. So those loans that we created is what's shown here. So here we can select the loan product as to what products that we are given this for. So let's say that this Mr. Kamal Pera has requested for a personal loan, so we can select on personal loans here. So once we do select on the personal loans, it shows automatically, it fills up all the information about this loan that we have inserted on the loan creation. So this currency is an LKR. The minimum loan amount is 1,000 and the maximum is it's in billions, I suppose. The minimum period is 1 and the maximum period is 60. We have set the grace period as 1 and the maximum grace period as 2. The interest type, it's a fixed interest type, and the rate is for 10%. So this is these are just dummy data, so not to be taken seriously. Here you can set up the loan amount by deciding with the customer. You can sit with the customer and see how much the person is requesting for loans for, and then we can decide how much we can grant, and then we can type in the loan amount. And the loan percentage is already set up with 0% with the loan product creation, and the loan type has been set it as monthly flat rate. So now we can sit with the customer and see what the payment frequency is for the customer, if it's daily, weekly, bi-weekly, monthly, or the end of the month. So if it's a daily payment frequency, then we can select on daily, and the number of installments. So let's say that this loan is being given for 2 months. So then we can have it as 60 installments. So every day we are collecting installments from this person. If we are having a spread, this is not mandatory. We can have a spread percentage, and we can set the collection start date when we are going to start the collection, and the documentation date, and the first installment amount will be calculated here. Once you do type in all the information, the loan amount and the payment frequencies and all that, once you type in all the information, the first installment amount will be automatically generated here. Here you can type in the application number, the document number, the grace period, and the penalty grace. So once you type in all the basic information for the loan, then you can go into the schedule. You'll be able to find the installment number, the balance, the capital deducted, the interest. So this is after the loan has been granted. And here in the info, you can select the loan manager that is appointed for the specific loan, the loan officer, the collection officer, the purpose that this loan has been acquired for, the sector, the industry, the CRIP status of the customer, and the risk type. So the risk type, it's not mandatory. You can set the risk type by judging the customer basically. So you can either have it as low risk, high risk, or medium, and you can have a risk weightage as well. So under the credit rating, you can have a credit rating as 1 or 2, and the compliance rating is if it's low, medium, or high. We can set up the credit line as to where we are getting the funds from. And in the profit center, we can set up a profit center so that the GL will record the profit center for this specific loan. And we can also have different routes. So this if this loan is being given for a specific route, then we can select that here. And if the FD certificate is attached, we can then select yes or no. Under the collateral here, we can add all the collateral that this customer has, so that this loan could have collaterals from the customer. In the checklist item, while we have created the loan, we have only added the NIC, so it's only the NIC that is shown. But if we add multiple documents that is required to have the checklist, then we can have those multiple documents that will show the checklist. And once you select that it is there, you can choose a file and you can upload the document. If we are adding joint borrowers for the loan, we can add the joint borrowers. You just have to type the customer number or the ID type, the ID number, the customer name, and the status will be automatically filled. And the loan amount you can type here, and you can add the customer. You can set up a settlement account. So you can type in the settlement account number, and all the information as the account name, the product, and the currency will be set up automatically. If you need to type any specific notes for this loan that you discuss with the customer that you feel like that needs to be passed into the verifier, then you can type in the notes and you can have a review date so that the person who is verifying the loan can also go through these. If we are setting up introducing information, then we can set it up here. In the audit trail, once the loan has been granted, or if it has been gone for a different stage, under the audit trail, you'll be able to monitor on what stage that the loan is in. If the loan has been deposited or counted, then those details can be seen here. So basically that is it for the loan creation. So once the loan is created, the person who is going through the loan authorization can go through it, and they can authorize the loan. And once the authorization is done, it'll then go into loan disbursement as a disbursement request. And once the disbursement request has been authorized under the under the cash management, under the loan payment function, you can pay off the loan. So basically that is how the basic workflow of the loan goes. Here you get to create the routes for the route field agents or the route officers that is going to collect the loans. Again, you have the option to set up multiple loan charges. If the customer is paying for if the customer is requesting for a manual payment, then you can process with the manual payment request from here. You can authorize it. If the customer is requesting to settle from the term deposits account, then you can settle the account from the FD. If the loan is being write off or waived off, you can set it up as a waive off or write off request, and then you can authorize the request. The loan can be rescheduled. You can change the amortization schedule from here. You can set up the reschedule request and authorize it as well. If there is a moratorium period for the loan, then you can set up the moratorium period. If the customer is requesting for reverse request, then you can set it up as the reverse request and can authorize it. Under the reports, you have multiple reports. I'll just go through a couple of them. You have the loan letters, the repayment schedule, the mortgage bond report, the offer letter report, the agreement of lending report, the promissory note report, active performing loans report, mobile daily collection reports, loan disbursement reports, and plenty more. Right. So under the loan documents, you can monitor the documents that the customers have submitted for the loan. So that is the loan management module. Pretty straightforward and simple, that you can just create a loan and then process for approvals. Here under the loan origination, here again what we do is loan creation, but in a different method. So let's say that the previous method, basically the previous method of creating a loan is designed for microfinance or small financial institutions. But if you have a different workflow to the one that I mentioned before, that let's say that you have a different workflow and the workflow is a bit complex, then you can create the workflow under the loan origination. So sorry, you can create the loan on as for a specific workflow under the loan origination, right? So here you can start with creating an application. So you can click here. Right, now it shows the product that you are creating the loan for. So let's take this is a personal loan product that we are offering. Okay, and now we get to choose if it's a new customer or if it's an existing customer. So let's just, for the sake of the demo, let's take it as an existing customer. Now I type in the customer information. Again, I'll take Mr. Pereira's name. So it's Pereira. Let's say this customer. Yeah, under the customer basic details, you have the customer's branch information, the center information if this person is any centers, the society information, the society number, the preferred language of the customer. So for the sake of the demo, let's just say it's English. The customer type, if it's a personal customer, or if it's from a company loan, so let's just take personal. The customer subtype, if it's a normal customer or staff, so we just take normal. The customer ownership has to select what branch the customer is applying for the loan from. And here you can select the salutation, the first name, the last name, and the full name, and the printing name. So this could be the printing name that is printed on the FD certificates, the passbooks, and all the documents that we offer. So we can have the printing name for the customer. The name with initials are automatically filled when you type in the first name and the last name. You can type in the customer's ID type. So if it's an NIC type, then you can select the NIC, or if it's a passport, the driving license. If it's a senior citizen or the birth certificate, then you can type in the ID type, and then the ID number can be typed. So once you do type in the ID number, automatically the system will know the date of the birth and the age. It will calculate upon the numbers of the ID number. And the age category, you can select what age category this is in, and the gender, right? So marital status, you can ask from the customer, and then you'll be able to set up the marital status. This has been done at the time of the customer management or at the customer creation, so you don't have to type in. All the information were filled automatically. The level of education is also recorded at the time of the customer creation, and the rating for the customer as well. Right. Again, all the information about the customer, contact details, the address, the printing address you can type here, but this has been created at the time of the customer creation. Here you can set up the nature of residence if the customer is living in temporary basis or permanent basis. Yeah, here you can set up the nature of residence if the customer is in temporary basis or permanent basis. The period of the current address, the district that the customer belongs to, the Gram and Lidari division, the divisional secretary division, contact method for the customer. You can select the contact method. So for the sake of it, I'll just type it as email. Email. So the contact type for the customer. So you can have multiple contact methods for this specific customer. So let's say that
Mobile is their primary contact method. You can type in mobile and have the primary contact method as that, and then select the country code and the details. You can add that once you type in the mobile number, and you can have the secondary contact method and the office contact method as well. So all this information will be recorded. Um, yeah, you can mark the customer's location and the relationship of the customers so that these people could be taken as for guarantors. And once you do type in everything, already the customer's wife has been registered as a different client. So once you type in the customer information, the system has recognized her as the wife and has added all the information about her and the bank details of the customer, so that we have already set up the bank that this customer is transacting with. So at the time of the loan disbursement, we will be able to just pass the loan disbursement amount to the specific bank. So you can type in the bank, the branch, the account name, the account number, and the account type, and the account balance. So again, at the time of the customer creation, this information has been captured. So it is shown here. This person has a bank account in the Hattel National Bank. The account number is this, the account name is this, and the account balance is this. If there's any customer remark at the time of creating the customer, then basically at the time of creating the loan application, then you can type in here. But if there's nothing, then you can simply type in no. Here you can set up the previous loan history. So you can type in here, it will automatically show what with the customer's number if the person has taken any loans. So in this case, this person has taken a loan for 30,000 and the loan period is 12 months and the granted date is this, right? So the basic information about the customer details has been captured here. Now we can capture the assets and the liabilities for the customer. So you can have different asset types as if it's a land or a building or machinery businesses, farm and cultivation of vehicles. So you can type in a description, add a value. So already there says there's an other asset type with a value of 100,000, and yeah. So these are already captured at the time of customer creation. But if this information is not there, then you can add these at the time of at the time of granting the loan. You can then type in the liabilities if they have any liabilities. So this is with their internal their own bank, or if they have external liabilities, maybe they could have taken loans. So then you can type in the loan amount, the outstanding amount, and what bank. So it's loan, what bank that they have taken from. All this information can be captured. Here you can type in the income and the expenses. So once you type in the income and the expenses, so let's say that for the sake of the demo, they have typed in as a salary. So this could be the month salary, which is 100,000, and the expenses is the household expense for 60,000. So once you type in the income and the expense, the net income is automatically calculated by the system. Here under the loan details, we selected what loan it is at the time of creating the loan. So we selected it as personal loan. So automatically this has all the information about the loan has been captured. So here's where this gets different from loan management. In the loan origination, as I mentioned, if you're going with different multiple workflows or with different levels of workflows of the authority levels, once you create the workflow, you can select the workflow that you're selecting, right? So the workflow that this loan has to go with. So if it's a basic workflow, you can select on that. If it's an advanced workflow, with the workflow setup, once you create this, it will decide how you want to process this to verify. So likewise, if it's a basic workflow again, then it will route to the specific role of the person that the loan approval has to be sent for. Right. So in loan details here, you can see the branch that this loan has been offered for, the document number, the loan amount in words. Once you type in the amount, automatically the system will type it in words. The loan type, if it's monthly flat rate. So this has been already decided at the time of creating the loan product. The payment frequency for the client, the number of payment, effective rate, the spread, the grace period, and the penalty grace. If we are setting up a settlement account setup, then we can set up the settlement account here. Here under the other information, you can type in the people who are involved in this loan. So we can type in we can select the loan manager, who this person is that is involved in this loan, the loan officer, the collection officer, the purpose for the loan, the sector this loan is being granted for, in the industry, the CRIP status of the person, the risk type for the loan, the risk weightage. These can be calculated by yourself. These are not mandatory fields. The credit rating, the compliance rating, the credit line, the profit centers, and the routes. So all this information can be captured. And here you can go for loan charges. Here we have already selected the loan charges at the time of creating the loan product. So in this loan product, it says there's only documentation charges, and these are fixed charged. The customer should deposit this money, and it's 1,000. right? So if there's a previous schedule as to the installment number, then balance and capital due, you can have the schedule for this loan at the time of creating the loan. And the checklist items for this loan specifically, we have only asked for NIC, so then we can simply upload the NIC and the document checklist will be completed. The introduce information, these are not mandatory. Again, you can type in who introduced for the loan, the collateral type, and if it's if you're adding joint borrow deals, we can type in the customer's number, or you can simply search for the customer and you can select the customer who is going to be the joint borrower for this for the main borrower. Here you can type in the cycle detail. So this loan cycle detail has already been added for basically at the time of creating the loan. You can set up the credit ratings here for the loan. So no credit rating information has been captured so far. In the documents, you can add the customer's image. If there's any attachment that needs to be added, you can add all the attachments here. So the NIC copy and all that we have mentioned that the customer needs to bring, we can add the NIC copy, the license or the passbook information, all the information as attachments here. In the checklist, it will show that the checklist has been completed. So in the workflow history, once this loan has been passed to the next step, you will be able to see what workflow stage that this loan is in. In the recommendation checklist, again, the recommendations you'll be able to see once the loan has been passed. In the project details, so this is a non-mandatory field. If you're granted the loan as for your internal company references, you can have the aim as if it's human, if it's social project or economic project, and the project purpose, what this project was intended for, the project address, implementing processes, the legal ownership of the existing future land property involved in the project, the main features of the project, and the officer managing. So these are to just make sure that to type in the information as to find out what is this loan for and what project that the loan is taken for, and to basically perform a feasibility study. Here under the loan evaluation, again, to moving on with the feasibility study, we can type in the project description. And
so here you can, as I was saying, you can do a loan evaluation. So you can type in the project descriptions. What is this project for? To do a feasibility study for the loan that is given, and you can type in the project information, the project expenses, the projected profit for the specific loan, the household income for the person that is applying for the loan, the household expenses, the net income, their debt repayments, and if they have any secondary incomes, then you can record this information on the system so that you know that this loan is a secured loan that you're providing. Here under the customer payment, if the customer has made any payments, then it will show here. So again, moving from here, so once you have created the loan, likewise, it will go on different workflows. With the workflow, once the approval is gone to, then it will go as a finally it will go under the loan disbursement as a disbursement request, and once that is approved, it will then be disbursed. Here you can edit the loan application, what you're creating, and here you can view the workflow dashboard, so you know what state that the loan is in or in what workflow it is in. You have the option to view the application as well. So basically that is it for the loan management module. If you have any questions, I'm more than happy to answer it for you. So please, if you do have any questions, raise your hand and we can have a healthy conversation. Right, seems like we do not have any questions. So thank you everyone for joining for today's webinar. I know it's a holiday, but thank you all for joining. Our next session will be on next week, which is the 1st of February 2024. We'll come back with another exciting episode on in our webinar series. So stay tuned, and we'll be announcing about the next exciting software that we'll be presenting on our LinkedIn, which is FINAP, and we'll also be advertising it on our Facebook and on other social media platforms as well. So thank you for joining again. Hopefully this session was insightful and you gained something from it. Until next time, have a good week. Bye bye.